Today, President Trump's media and technology group files to list a new crypto ETF. Robinhood CEO Vlad Tenev defends the company's OpenAI and SpaceX stock tokens. And Elliot Chun of Architect Partners discusses the recent wave of crypto M&A activity. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Crypto prices are mixed along with stocks after President Trump offered no exceptions to his August 1st tariff start date. As of noon Eastern, Bitcoin traded flat, still holding on to the $108,000 level. Ether rose more than 1% and Solana's SOL token dipped under 1%. Turning to crypto exchange-traded funds. Today, Trump media filed to list a crypto ETF holding several cryptocurrencies, including Bitcoin, Ether, SOL, and XRP. According to this SEC filing, the fund will be managed by Yorkville America Digital and would keep the vast majority of its holdings in Bitcoin and Ether, with 70% going to Bitcoin and 15% going to Ether. Okay, let's talk about the top stories. Ethereum co-founder Joe Lubin joined CNBC Squawk Box this morning as the network has been catching the attention of major financial institutions, which are increasingly building on the blockchain. Last week, we told you that Robinhood became the first publicly traded U.S. company to launch tokenized stocks on-chain using Arbitrum, a layer 2 built on Ethereum. The rise of tokenization and all the stablecoin hype have also been helping stocks tied to the price of Ether. This morning, Lubin discussed the difference between Bitcoin and Ethereum at this juncture.
Bitcoin's value proposition is now. Ethereum's value proposition has been perceived to be in the future. We've been building scalable infrastructure, layers of enabling infrastructure for about a decade, anticipating that all the activity of the internet and the web will move to Web 3, and Web 3 is really the natural evolution of the web protocols, sort of a re-decentralization of the World Wide Web. So Ethereum is scalable enough, affordable enough, legal enough in the United States. It's very usable right now, but we haven't had the applications and we haven't had the consumer end users and the enterprise end users because former Chair Gensler made it really unattractive to use tokens or issue tokens or build applications in our ecosystem. So that is all behind us. We still have a lot of Ether out there and not enough activity to sop it up. And so that's a reason why we and others are doing the Ether treasury strategies. Not only is it a great business to run, but it's going to be critical to enable the supply-demand dynamics of Ether to right size as we build more and more applications.
Now, Lubin also talked about some of the firms that are turning to an ETH treasury strategy. He pointed to Wall Street strategist Tom Lee, who joined Bitcoin miner BitMine Immersion Technologies, which is aiming to become the biggest publicly traded holder of Ether. And just yesterday, we told you that Digital recently exited Bitcoin mining to focus solely on ETH, announcing that it completed its transition to an Ethereum treasury strategy. Next, turning back to Robinhood, as Lithuania's central bank told CNBC yesterday that it had contacted the company seeking clarifications over its tokenized equities. That's after OpenAI raised concerns over the product last week. The Bank of Lithuania is Robinhood's lead regulator in the EU after the retail trading platform received a brokerage license and crypto asset service provider license from the central bank. The development came after OpenAI distanced itself from Robinhood's stock tokens product. Launched the end of last month, Robinhood said the product gives users in the EU the ability to invest in shares in the form of blockchain-based tokens, even for privately held firms like OpenAI and SpaceX. In a CNBC interview this morning, Robinhood CEO Vlad Tenev defended the firm's OpenAI and SpaceX tokens amid those concerns surrounding how they're structured.
It is true that these are not technically equity, and I think that's a multi-layered statement in and of itself. As you guys probably know, OpenAI is a nonprofit LLC. So basically what they're giving investors, and these are institutional investors that have gotten exposure to the company, are various instruments like equity upon the event of a conversion to a for-profit at a later date, profit interests, things of that nature. So in and of itself, I don't think it's entirely relevant that it's not technically an equity instrument. What's important is that retail customers have an opportunity to get exposure to this asset, which is incredibly important. I mean, I think one of the biggest problems we have today is we're building this artificial intelligence. Most of the companies on the bleeding edge are private, and it has tremendous opportunity to disrupt the status quo, disrupt the daily lives of so many people. And I think the best way we can make sure that it benefits all of humanity is to give people exposure to it, make sure they benefit directly from the rise of this technology. So I think it's important, no doubt that since this is a new thing, regulators are going to want to look at it, and we've built this program in a way that we believe will withstand scrutiny, and we expect to be scrutinized as a large, innovative player in this space. So we're of course, happy to continue to answer questions from our regulators and really anyone.
All right, turning to M&A activity in the crypto space for our main story, as we have seen several deals recently. That includes yesterday's announcement that AI cloud infrastructure provider CoreWeave plans to buy Core Scientific, a data center infrastructure operator. I spoke with Elliot Chun of Architect Partners about all the recent activity in the first half of the year. He also provides his outlook for M&A activity for the rest of 2025. Architect Partners points to an exceptional second quarter as it relates to crypto M&A activity, saying it was resoundingly the best quarter ever for such activity. And this comes after M&A activity in the space first reached a record during Q1 of this year. Can you take us through some of the numbers? How many transactions did you document in the second quarter? How much money poured into these deals? And can you take us through some of the notable mergers and acquisitions in the second quarter as your Q2 2025 crypto M&A and financing report drops today?
Absolutely. And yes, the headline of this quarter and for the past 3 quarters has been monetization, i.e. return of premium value transactions. Fantastic for our industry. As you had mentioned in Q2, 79 transactions, which is an all-time high for a quarter. And when you compare the first half of 2025, there's 145 transactions. You compare that to a full year in 2023, which posted 147 transactions. So from a amount of transactions, we continue to see momentum building here, and the consolidation story continues to play out. The other big headline is consideration paid. This quarter, $4.9 billion in consideration paid, far and away a record for the quarter. For reference, last quarter, Q1, posted $2.3 billion. So we're more than 2x larger in size from consideration paid. Obviously, that's led by 2 major transactions, with Coinbase acquiring Deribit and Ripple acquiring Hidden Road. There were 7 transactions over $100 million in the quarter. Again, another record. And so, all around where you look, it's been an exciting start to 2025. And we'll touch a little bit on the treasury strategy. I just want to note that those numbers don't include any treasury strategy activity.
So what do you think are some of the main factors contributing to the second quarter becoming the best ever for crypto M&A activity? How much of it is due to a more crypto-friendly administration and SEC here in the U.S.?
I think a lot of it has to do with the improved regulatory environment here in the U.S. We'll talk a little bit about the treasury strategy, but just to see a real-time effect, the repeal of SAB 121, which was a simple mark-to-market accounting regulation, really gave way and paved the way for a very active treasury strategy. And so as we think about the Genius Act being close to passing here, and as we think about the Clarity Act coming in here for digital assets, this is really allowing M&A to flourish and companies to really start executing on their crypto and digital asset strategies. And it's very, very, very clear also that it is allowing many crypto companies to consider public market paths, i.e. via IPO, SPAC, or reverse merger. And so we attribute a lot of this to the improving regulatory environment, which we all realized was really a dampener on activity in our space, particularly with non-crypto natives. And now we're starting to see the numbers and the transactions unveil themselves. And we expect a very active second half of 2025.
I want to point to some of the highlights in your new report, which notes that crypto native businesses are increasingly turning to M&A as an important growth strategy, and that the bigger news is that TradFi services players are beginning to demonstrate increasing commitment to digital assets. Why do you think these institutions are increasingly turning to crypto, and what do you expect in the months to come from both groups?
Well, they're turning to crypto companies and businesses because they are starting to realize that our industry has transitioned now from experimentation to implementation and now real world adoption. And that's across all different types of use cases, primarily the store of value and the speculative use case. That's across payments, the medium of exchange use case. And it's all comes out in the number of users, the revenue generated from those users. Traditional companies cannot look away. And right now we're seeing a theme of the crypto category leaders will either be acquired or they will be the ones acquiring. What do we mean by that? When you think about the category leaders that we have, with Deribit being the #1 derivatives exchange, when you think about Hidden Road being one of the top prime brokers, those were groups that are proving the use cases, they're proving their businesses, and are adding very significant services and revenues to acquiring companies. And when you think about the who will be acquiring, obviously here you had Coinbase and Ripple and Kraken earlier acquiring NinjaTrader in Q1. This is crypto's belief that they can challenge the world's largest institutions. And right now they have a head start and they're making significant investments to make sure that that head start is solidified. So if you are a category leader, we expect that you've already either been approached for acquisition or you are yourself are making plans to acquire in the hopes of becoming a large and publicly traded organization.
Now, I want to point to some very recent M&A activity in the crypto space. Just yesterday, CoreWeave announced that it will acquire Core Scientific in an effort to meet its AI power needs as the move brings critical infrastructure in-house. The all-stock deal is valued at approximately $9 billion. What does this deal signal to you, and do you expect we will see more like it in the months to come?
First off, it's a remarkable bankruptcy turnaround story, and it's at the heart of the intersection of Bitcoin mining and high-performance compute. Very few people remember that Core Scientific came out of bankruptcy in January of 2024. So within an 18-month period, they were able to achieve an astounding outcome. So that just goes to show, we say the velocity of innovation or how quickly crypto moves as an industry. I think there are very few stories that have that 18-month bankruptcy to acquisition number. Now, what is the strategic rationale for CoreWeave and Core Scientific? Again, it's the promise that Bitcoin mining and high performance compute is a story of power price optimization, right? And HPC has a higher power cost, but the power requirement isn't as stable. And the thesis is if you're able to marry that to Bitcoin mining, which can be very flexible in terms of its on-off capabilities and the flexibility of its operations, can you load balance properly to give HPC providers an edge in a very rapidly expanding AI demand use? And so this fits very well into that story. It is important to note that many organizations, particularly Bitcoin miners, say they can just spin up a AI high performance compute business line. Very, very, very difficult to do. The way CoreWeave and Core Scientific, and they have had previous relationships, the way they're doing it appears to be the most sustainable long term in terms of combining a scaled HPC operation with a scaled Bitcoin mining operation. So it's great to see this activity, and obviously 9 billion all stock headline number to start Q3 is just a fantastic continuation. And I guess we're already at all-time highs in consideration paid for a Q3.
Now, Chun also discusses the wave of crypto treasury activity from public companies. You'll be able to check out his full interview over at cnbc.com/cryptoworld. Okay, that's all for today. We'll be back again tomorrow, and we'll see you then.